Binance, but I just need all this stuff right now based on what I know about Square and how their lending works. So I'm just saying, like, I'm sure someone who's put more thought into this, or we put more thought into this ourselves, could come up with something similar to that, where there's more interesting ways of lending money to companies or people.
No, I love it. See, this is the value that we're giving back to the audience. These great business ideas that we don't have time to evaluate. And here we go. All right, Eshan, welcome to our second episode of the podcast.
Thank you. So excited. This has been awesome.
Yeah. And today's podcast, last time we got into some good like groundwork material. For folks that are listening for the first time, our goal here is to cover decentralized infrastructure, decentralized use cases, a bunch of different broad topics for Web3. And on today's episode, we've got a couple interesting topics. I'm going to get into zero knowledge and why that's really popular in the space right now. Eshan, it sounds like you're going to get into use cases.
Yeah, I'll talk about some interesting use cases that I've seen. Would love your thoughts on the different use cases that you're also seeing.
Perfect. And then we'll wrap up with a quick hit on the news article. There's been some activities with the federal government.
Looking forward to that section.
Yes. Likewise. Well, jumping into the first topic here, there has been a lot of investment, VC investment, and a lot of interest in this topic of zero knowledge proofs over the past, year, let's say, in the crypto space. So I'm just going to go ahead and share my screen. The reason this is so important for Web3 infrastructure is that most of everything that we've done in crypto up to this point, blockchains, Bitcoin, you can actually see the transaction happening. You can download the history of the transaction. You yourself can go and verify everything that's happening. You don't have to take anyone's word for it. But as people want to build more sophisticated use cases, they kind of outgrow that in some ways, and smart contracts are difficult. They look for other ways. And so this idea that they call zero knowledge proofs is an area that has a lot of potential to fill in the gaps, to give people more sophistication to do machine learning or build applications that are off chain, but to still have on chain trustlessness, all the benefits that you get of a smart contract. And so when you talk about ZK, really what it's saying is that there's zero knowledge of what's going on in the back end. You just get a proof that your computation was done correct. So in this case, this is actually an article from Towards Data Scientists. They have a really nice visualization of what that looks like. There's basically two parties, a zero knowledge circuit. There are the prover, the person who's actually doing the work. So if I said, Eshan, I'd like you to perform some ML inference for me, I don't actually need to see that you have the data. I don't need to watch you do the work. I just need you to do it and then send me a proof at the end. That proof, I'll take that at the end. I'll be the verifier and I'll run this math, which I think Vitalik Buterin referred to it as magic moon math, which is fair. It's pretty sophisticated stuff, but what you can do with it is very powerful. So we also have this agreed upon set of rules, which is called a ZK circuit. And so within that ZK circuit, as long as your computation operates in a specific way, this circuit that we agreed to, all I have to do is take the receipt of that execution, the proof. I'll run some math against that proof to make sure it looks correct. And there's no way that you could have falsified the computation. You actually had to have the data. You had to have done the computation properly. And so even though it's not the same as doing everything on chain, the way that we've done in crypto and Web3 up to this point, it gives us a lot of the same trustless verification, a lot of the benefits of it. It's early days, but people are hopeful it can unlock some use cases. But do you have any opinions about it, Eshan?
Yeah, I mean, I think also question for you, Wes, and maybe I'm understanding it incorrectly, but like, you can do these ZK proofs or any sort of these zero knowledge, computations, and at the end of the day, it's still those proofs are still put on the blockchain, right? Or can be put on the blockchain. So it's not really that we're getting away from like how we've done things historically on the blockchain, because at the end of the day, most of these blockchains are just really finalizing or publishing the transactions, right? Everything else really happens off chain. So I think it's really cool because you can prove a lot of things in this paradigm. When ZK proofs are more widely used, and still have the transactions logged on the blockchain. Is that right?
That's exactly right. Yes. No, that's an important caveat. Thank you for calling that out. It's the integration. It's like the best of both worlds. You still have the benefits of the blockchain to show that it occurred at a specific point in time, but then you could do all kinds of other fancy, sophisticated stuff afterwards. And you're right. I think you called out some examples of companies in this space. Cartesi is doing this. Risk Zero is another big player. Axiom, Lurk Labs, which is one funded by Protocol Labs, Matter Labs. There's a lot of people getting VC money, and I think they all kind of see the potential. If the core research can get sophisticated enough that you can do meaningful things, then the use cases can grow pretty substantially.
Yeah, 100%. I think there are like a whole bunch of interesting use cases on the whole like zero knowledge stuff. Cause you can imagine that like, let's say like pre 2006, 2004-ish, like everything someone did on the internet wasn't all being tracked. Like now everything we do, every company has like a log of everything we do and it's completely tracked. And, this allows you to be able to be like, okay, like these set of transactions or this set of computation happen. But, like it's not available to anyone. Now, I do believe that like companies are probably gonna do ZK, proofs and then probably do something with that data. They're going to keep that data anyway, because that data probably has some insights, but it won't be on the blockchain. So I'd say it's probably like, not a full step function upgrade, but, probably something close to that. But I've seen some pretty cool, not about companies, but some interesting applications that I would love to see it in. Right. And, one of them is actually like around identity, decentralized social, right? Like if and my favorite application of this is actually voting. So I imagine in the future that when you vote in any sort of election, let's say anywhere in the world, what you would like to see is that the people who said that they voted actually did vote, right? And then like people didn't use like people who moved out of state or dead people or whatever it might be for election fraud, right? And I mean, there are some issues with counting ballots by hand also. So it's like a good backup, but you want to move to electronic system eventually, right? Like we move to electronic things for so many things now, and everything keeps getting digitized or digitalized. So for me, like I'm really excited for this technology because I really think that like, it could take a whole bunch of applications to the next step, but especially voting. Which is something I care a lot about governance and politics. So this is something that's been on top of my mind. So.
Yes, no, that's an interesting topic to bring up because I always, we share with friends, like, if we just had the voting system fully transparent, I have to look at a log and say, okay, Wes voted for this candidate. Everybody could see, just like you have a public ledger, you could see who voted. But then my friends would say, I don't want people to know who I voted for. I want to keep that, But to your point with zero knowledge, you could get a receipt that says, yes, you voted and it was counted correctly. And you could have sort of a receipt of it. So you get kind of the benefits of both, but still maintain privacy.
Yeah, exactly. I mean, this used to be a problem back in the day where like there was a lot of coercion among like people who own businesses and their workers about like who you voted for, right? And it's like they wanted like proof that you voted for someone, or like they would stand outside, and there was a whole bunch of like issues around that. And like today, you don't want anyone to know who you voted for. And if you want, you can share that. But like as a broad, no one should be able to see like who did this person vote for. You could imagine that would cause a lot of problems. But from like a government's perspective, you want to know who voted, and you wanted to make sure that only the people that said they voted or that showed up to the ballot actually cast that ballot, right? And so I think this is like a great application for voting. And like, I would love it if it was like an open source system with ZK proofs recorded on the blockchain, so that like you knew exactly the amount of people that voted in each state, in each district, but you didn't know who they voted for, like publicly, right? Now, of course, like there needs to be some sort of like ballot counting, et cetera. But I mean from like a blockchain and ZK proof perspective. So super cool technology. I think there are a lot of other cool use cases. Um, identity verification, right? Like all these companies need to do KYC and anti-money laundering. So if you need to get information from your customer, one thing that's really interesting is like being able to prove it you say you are without sharing that data with, banks, or, banks might be not even a great one, but like fintech companies,
Yes. Yeah, you're right. Because a lot of people talk about like getting more users into decentralized finance. And one of the issues is KYC. So there's this contention, do I KYC myself, which is give my public information out and kind of onboard institutions and other folks, or do I keep it anonymous as is today? But in this scenario, you could have more like fractionalized identity. Like I'll let you know parts of my identity as opposed to all of it in some sense. You can kind of be selective in that way. I think Zcash was one of the first projects, which was like a privacy alternative to Bitcoin that was popularized maybe, 5 or 10 years ago. But now it's more relevant. I mean, these esoteric math formulas and papers have real applications. So there's people that are applying them to new projects, applying them to new libraries.
Yeah. Are there any applications or companies that that you've seen recently, let's say that have already been built, that you're super excited about?
Yes, there's a couple that lead the space. So Cartesi and Risk Zero have been around for a while. They're both blockchain Web3 oriented platforms that allow you to do not everything you could do in the traditional Web2 compute. Like you can't necessarily run a website. There's limits to what you can do. But when you run it and you run it on their network, you get back a proof that your computation was done correctly. And it's more sophisticated than a smart contract. There's also Blocklist. We were just talking about Blocklist.network is early days, but I would say they're shooting for more compatibility. So you could take an existing application that you wrote in Web2, you could run it on their network, and then you also get the ZK proof back from it. So it seems like between these different vendors in the space, there's going to be enough engineering in the space, and eventually someone will get it right. And then I think the other key is just connecting those use cases to it so that people can take advantage of it when it's available.
Yeah. Yeah. Makes sense. Very cool. Yeah. I don't know too many companies in the space. It's not something I've kept up with, but one company that I'm excited about is Lurk Labs. So super, super cool company. I've been more focused on use cases. I think, we talked about AI and ML last week. I think, zero knowledge proofs in that space is also going to be important. And then one interesting thing, and maybe we can talk about this in the next section, is like CBDCs, central bank digital currencies. So, a lot of countries are releasing them, but they want to, like, how cash is anonymous, right? They want this kind of system where the digital cash that they release has a lot of the properties that physical cash has today. And one of those is anonymity. And like, ZK proofs are probably going to be like a big, if central banks end up pushing this, like digital cash should be very similar to physical cash, I think ZK proofs are going to play a big technical part in building out the CBDC infrastructure.
It's an interesting point because, the funny thing about CBDCs is like, on some level, if a country wanted to have a digital currency, they could go to Ethereum and they could create a token. They could call it wrapped token. If it was Argentina, they could create a wrapped Argentinian peso. And they could say, the Federal Reserve could say, the wrapped Argentinian peso on Ethereum is our official CBDC. But that probably won't happen because they want to have more control over the ecosystem and the infrastructure. So does that mean that like with CBDCs, they want to run their own nodes and their own validators, or they just want to run like a private network to make?
Yeah, it's going to be a private blockchain network. I mean, if I was a central bank, I would not want to put it on Ethereum, right? I mean, part of the struggle, and this is getting a little bit away from the Web3 stuff, is that as a government, you do not want to rely only on private payment networks. So like Visa, MasterCard, ACH, wire transfer, right? Venmo, mobile payments, right? Like Alipay and WeChat Pay in China and Paytm in India. You want to have a public way of paying, a public network, and cash has been that public network. But nobody wants to pay with cash anymore. No one carries, cash, and within, as inflation happens naturally, like no one's going to carry like change, right? Like you're going to only have like 20s and 50s or whatever over time. So digital cash is like the best way. And that's like the public network that you can process payments on. Also, if it's going to if you want to remove physical currency and introduce digital currency, well, you also need to be able to control monetary policy, and you can't control monetary policy that well from like running, having a token on Ethereum. Whereas like, if you want to mint or burn, which is the equivalent of like, mint or burn tokens or money, it gives you control over that. So I think it makes sense from a central bank to have their own private blockchain networks and run, verified validators and stuff like that. But also, what's interesting is that all this innovation happened in Web3 payments and blockchain, and the governments have been like pretty, they've been pretty keen on like, let's use this new fintech innovation to build our own payment system. And in 2015, I think what Ethereum's Vitalik said, there's still not a killer use case of blockchain. And I think, the government's found a killer use case of blockchain.
No, that makes perfect sense. I could see all the benefits. One thing that I'm always curious about with those sorts of changes for the US government or other countries is the existing payment processors that have tremendous profits coming from like the Visa, the MasterCard, the lobbying power that they have. Would they allow it in the US? And then even more so like in India? I'm not knowledgeable about how the lobbying process works in places like India or similar countries. Do you think that the government could just come in with and just ignore that kind of lobbying power in those countries and just roll out a national payments processor and undercut their business? Or would there be pushback or some compromise?
It sounds like they want to, create like a 2-tier system where like the banks and the fintech companies still do processing, can handle processing also. And not, there are going to be, by the way, there are going to be some countries that completely get rid of their payment networks and all payments happen through like a CBDC. Right. It sounds like countries like India and Sweden and the European Union and the US don't want to do that. Right. But I downloaded, I think the Fed did like a RFI on CBDCs. And so I downloaded all of the PDFs and I just went through them and started typing in like Stripe and MasterCard and Visa and all the big companies and the big banks and everyone. And almost every single one of these big fintech companies, big banks, big financial services companies have like a 3 or 4 page information about what they would like to see. And if you read it, you can start seeing like, they suggest a bunch of good things, but always in like the perspective of like how it keeps them entrenched in the system. So, I mean, I think, as with all things, like, let's see how it's implemented, but I think CBDCs are going to come and they're going to be good. At the end of the day, the implementation details will be important. And in India, India is actually probably one of the most advanced countries in the world for digital payments. They have this thing called UPI, which is like made by the government with super low transaction fees. Anyone can pay anyone else if you have like, then like what they call another ID, just a, government ID. And like people used to use Paytm and cash a lot. And I think Paytm, right after its release in a couple months, Paytm like lost half its valuation in the public markets or something like that. So before that, even then, like Paytm, just like in WeChat Pay and Alipay in China, like QR code payments, super cheap. A lot of these places don't accept. A lot of places in China don't accept credit cards. So because it's so expensive, right? So I think it would be cool to move to like this new like mobile based, like digital based payments with digital cash. And it's going to be the killer application of blockchain.
I agree. And at the very least, it could kind of bring about other things because people's tastes and preferences move in that direction organically.
The government wants to introduce this, but like they want private firms and private companies to build technology themselves, right? I read everything that like the Riksbank, which is the central bank of Sweden, the Fed, the RBI, Reserve Bank of India, which is their central bank, have published. And like they make it very clear that they care highly about private fintech innovation. They care highly about anonymity. They care highly about building something that's scalable. They care highly about not disrupting how financial services work today, in the sense of like, they don't want the companies today. They don't care if the companies today that are big stay big, but like, you don't want to disrupt how the entire financial industry works on, loans and payments and, all these other things that has been really, like, over time has become very, like, mature and frictionless.
Is that a good segue into, you had a couple other topics related to credit wallets and tokenization. Do you think we should touch on
Yeah,
those?
let's touch on those. When we talk about stifling innovation, is like, and we'll talk about this later, but the SEC has taken, and the Biden administration has taken a very, like, negative view on Web3, blockchain, and cryptocurrency, and almost seems like a short-sighted view, right? Where other countries are building regulations, the SEC refuses to. But I think there's so many good use cases of crypto and Web3. That's just, and a lot of those are in DeFi, but like, you could imagine like, payments. Right? We talked a lot about digital payments, but like some of the problems today with payments is that, like, if you do like a wire transfer or ACH transfer or something, it can take 2 to 5 days for that transfer to happen, right? Credit card payments take a while. Like, all these things take a long time, and we want to move in a direction where, credit card fees go a lot less, right? Like, merchants pay like 3 to 4% today. It's insane that in today's world, you're paying 3 to 4% just to make a transaction happen, right? And Visa and MasterCard keep increasing the prices. I mean, you saw like Visa try to increase the price, and then Amazon was like, "Oh, we don't accept Visa anymore." And then they like got into a fight for a few months. You're like, starting on this date, we're not going to accept Visa. And this is like a year and a half ago.
Oh, I didn't know that.
And
That's interesting.
finally made a deal, that like was like, okay, they're not going to, I don't know what the deal was, but they had to make a deal, right? Like Visa and MasterCard keep increasing rates. And the European Union has, I think, and a bunch of other countries has actually limited how high transaction rates can be. I think it's like 0.4% on credit cards in the EU. Now, I don't remember, something like that, but they got to make their money somewhere else. And now they just charge like American customers or Canadian customers, So like, I think these payments is like a great place for crypto, right? Like, it can speed up the transaction, and they're almost cheap. I mean, they're very cheap, almost free. So I think that's a great use case. And then another one that I saw recently that I found interesting was actually instant stock settlements.
Interesting. How would that work?
So the way I understand it is that, it takes like a couple days for stocks to actually, get settled, because when you're using something like Ameritrade or Robinhood, they're being a broker, but the stock doesn't actually get settled immediately. Right. And I don't know if you remember this, like, Robinhood stuff of like trading freezes on certain assets and the GameStop meme, stuff that was going on. Right. If you had instant settlement that could happen on the blockchain, right, you could get rid of a lot of this, a lot of the problems that happen in that space. So I think those are just two great DeFi examples of like the power of crypto and the power of blockchain, that I would love, that I think if we like evolve to use in our daily lives, we'd probably have like better results. What are your thoughts on those, or any other interesting use cases that you've seen?
I think you've hit on a really interesting one, which is, some people call it like real world assets, which is stocks, equities, real estate is one that people talk about often enough, which is, in any capacity, could you represent ownership of the value of something in the real world on chain? And how do you do that? I mean, effectively, when things are on chain, you have to have a certain belief or trust that it exists. Like an NFT, you have to have a belief that a JPEG of a funny picture is worth something. You have to kind of play pretend in a certain way. So then with something that's an off-chain real world asset, how do you ensure from a legal perspective that it gets connected to the owner of that token. There has been some really good work done in the decentralized science space, like the IP NFT, which is highly controversial in terms of whether it's going to, survive or not. But folks, VitaDAO, Molecule DAO are busy in this space. And essentially folks are trying to, over time, represent in, let's say, real world, legal corporations, legal assets, such that when they're incorporated, they point to a token on chain. And I think even like there was a DAO bill that was passed in Wyoming, and the whole premise was, like the controller or the authority for this company would be a person who owns a token on chain. So there's not a lot of case history yet of people going to court to validate these things, and it's it's a gray area legally. But if over time you could build up connections between those real world assets and those on-chain components, then it would fix a lot of what you're describing, which is faster transaction time, better liquidity, better, price seeking nuances, different like lending mechanisms and things like that. So there's a lot of people that want this to have happen. And even though we haven't found a great solution for it yet, it feels like if people want it long enough and they hack at it, there's a good chance they'll stumble across some good solutions.
Yeah. Another one, something that's similar to what you mentioned, but is like renewable energy certificates. So like, I met a couple of people who are building stuff in the renewable energy certificate space. And what's interesting is that like, it's not done in the best way, even in a version of forget Web 2.0, like they're doing, it's like it's like a dark market in the sense of like people who get these renewable energy certificates, they sell them to brokers or they sell them through brokers, but the brokers don't really tell them the real price of what it should be valued at. So like they're like skimming off the top, and then they're like double counting issues and all of this. And like, you could imagine if somebody were to build like an exchange for renewable energy certificates that were standardized format, and all it did was like, took your legal paperwork and turned it into an NFT. And then you could, the NFTs were like the representation of like, the legal certificate. And then you could trade these on more liquid markets, right? And with like price availability, like in the open. So that's another cool use case. Another one that I've been thinking about is like a credit wallet, similar to credit cards, right? But like with a crypto wallet, we think of it as like a mix of a bank account and a debit card, where you have some money in your account, in your wallet, and then you can transact with it when you sign transactions, and then it immediately comes out. But like, I think a lot of the world, or a lot of the US at least, runs on credit. And so like building out like a credit mechanism where consumers can take like credit, and spend credit and then pay back that credit and, somehow tie it to an on-chain credit score, or even like make partnerships with these, FICO and whatever to like affect your credit score. I think that it's an interesting use case, and I think somebody smart could solve it. So I think there's some super cool use cases in the crypto and Web3 space.
Yes. No, I believe it. I agree. It's terribly ripe for disruption. Fortunately, I think there's a lot of projects that are working on this space that are trying and iterating different models to make it work. One thing that I always also wanted to have happen for crypto was small business loans. So just to give you an example, if there's a pizza shop down the street and I know that it's a really well-run pizza shop, I know that it's always busy, I know the owners, but they need some capital to expand to buy more ovens, more pizza ovens, something like this. In the traditional market, they might have to go to a bank and they'd have to apply for a loan, et cetera, et cetera. But what if people in the community wanted to participate in loaning money to that business? They knew it, they had, unique information and things like that. Are there ways that you could put that loan or that capital on chain? And how would you represent the credit risk? How would you represent the ability to repay?
What would be cool is like an advanced version of like the Square lending business. So like, how does the Square lending business work, right? Like I'm a Square customer. I'm looking at this restaurant across the street. They take Square. Square has access to all the transactions that happen. You could also, and based on the transactions, they can tell like, what your revenue is. And, you might bank with Square. And so like they have access, your bank account because the payments need to go somewhere, or they can, they can see how much money is going into your bank account every month. Right. And, then they give you like small business loans, right? Now, obviously, if you're not a Square customer, you can't get access to these loans because they don't do it off of like the traditional underwriting method is like, how much money do you have in the bank account? And then a bunch of other, offline, offline things that decide whether a restaurant can get a loan or not from a bank. Square makes it super easy. They have a UI. They say you can get a loan like this at some interest rate, right? And there's some other companies in the space doing it as well. But like, imagine you did that on the blockchain and then had like, not just like I don't know, merchant to merchant, but like a person to merchant, kind of lending mechanism, right? Now you would have to like securitize it or whatever, make it tokenize it, do something where it's like easy to trade in liquid markets. So you can trade the loan if you don't want it, but also like a way to underwrite it. But it's not like, those are just using data to figure out like how to do those things. It's not like, it's not hard. It's just, you have to figure out how to make a market for it. So I think there, just to build off of what you're saying, I think there's a lot of cool stuff that you could do in crypto if the transactions are become to more open. Like I'm sure that, a lot of restaurants would trade like, giving up their transactions or using zero knowledge proofs to prove that these are the transactions in exchange for loans, right? So I'm sure there's like a really, really cool business out there in this sense, but I just made all this stuff right based on what I know about Square and how their lending works. So I'm just saying like, I'm sure someone who's put more thought into this, or we put more thought into this ourselves, could come up with something similar to that, where there's more interesting ways of lending money to companies or people.
No, I love it. See, this is the value that we're giving back to the audience. These great business ideas that we don't have time to but we have evidence to take a cut off of any future ICOs.
Cool. And then the last, I don't know, this is the last use case that I find interesting is like decentralized social. Like I always felt, I get Twitter's business model, right? It's an ads model, or historically has been an ads model. So they didn't want all these. So on the ads show up on the UI, right? So like if you're an ad business, you want to control the UI, right? Because you want to show the ads in the best way that you can monetize whatever. Just click through rate highs immediately. But I always felt like Twitter messed up by like taking away the API access, all the different Twitter clients that existed, so that people could have their own Twitter user experience, right? And, you could have built that ads thing into the API itself where you force people to show up or something. But essentially, by Twitter, like I think of how like decentralized social today is like the good ones will probably be a protocol, which is like similar to an API, right? And then you have to like interact with the protocol, and you can build your own. Everyone can build their own like custom user experience on top of it. And you could imagine, I feel like if Twitter had done that and like figured out how to make sure ads still get put into all the places that they want ads to put, it probably would have taken off, because I think, more clients would have probably increased like their daily active users or their monthly active users. So I think there's something interesting that could happen in decentralized social, but at the end of the day, it's a user experience and like user acquisition play, right? Like social networks are the biggest network effects.
Yes. Yeah.
Right. So
No,
nobody's going to be, sorry, I'll just finish my thought. Nobody's going to be on the social network if other people, their friends, people they care about following are not on it. Right. So at the end of the day, it's always like a user acquisition strategy.
Yes. No, you hit it on the thing. If none of my friends are there and none of the people I care about, I'm not going to migrate into this new platform. I'm just sharing a couple of examples of a couple of the like more prominent ones right now. I totally agree with you though. Like people want to own their own data. Like where should the monetization happen in social media? Should it be through the ads and the user interface? Does it have to be there? I mean, in these new paradigms, like this is the one that Jack Dorsey funded through Twitter and splintered off, called Blue Sky. And becoming very popular right now among like the tech crowd is a Twitter alternative where you own your data. Your data lives in an encrypted database. right now the infrastructure is all ran by the Blue Sky team, but you don't necessarily, it's very weird. When you browse on Blue Sky, you do not get ads, and it's very strangely pleasant to consume content without ads. So maybe users have to pay for the infrastructure that runs on the back end, and the data just lives. It's, the data is sort of theirs. They don't have to pay for the data access per se, or maybe there's some other way to monetize it. Have you
Yeah.
tried or experimented with
I've been on
these?
Farcaster. I think
Okay.
Farcaster.xyz,
Mhm.
if I remember, or you can just Google it. Yeah. And then they have they're a protocol for decentralized social. And then they also build their own client called Warpcast. But like anyone can build their own client on top of Farcaster. And I think, if you go to farcaster.network, actually they keep stats about like how well they're doing or something like that. So you can see like monthly active casters, right? 2.8K, weekly active casters, 1.5K. So you
Nice.
can see, it's pretty interesting right now. Hopefully eventually that number grows, right? It's still pretty new, I think. But yeah, this is something that I've been playing around with that I find pretty interesting.
It's good for humanity that people are trying these things. Hopefully, eventually, it'll be so easy to run these things that some kid in their dorm room in Harvard will just start a new decentralized social network because the tools are so easy to use and readily available, and it'll take off, and we'll all be able to sort of control our destiny a bit more.
Agreed. Cool. Do you want to move to the next topic, or are there any other interesting use cases that you see that you want to talk about?
Let's do it. I'm super interested. So, did anything interesting happen this week? Anything at all?
Oh man, everyone's been talking about it. I literally reached out to a bunch of people like, how are things going? And they're like, the SEC ruined my week. I was like, okay.
Yes, they dropped the bombshells. But what do you how do you think it's going to play out? I mean, it looks like the price of Bitcoin has rebounded since that. But
I think the
what
price
do you
of
think it's
Bitcoin
going
and
to?
Ethereum are actually up because they've said Bitcoin and Ethereum are not securities, right? I don't know.
Yes,
Oh, maybe not. Okay.
that was a dip. I mean,
Oh
aside
yeah,
from
no,
the
but it
past
came
few
back from the
minutes.
dip, right? Like it did come back
Yeah.
from the dip. Yeah. Um,
It's a scary thing whenever the SEC gets involved, but it's interesting because Coinbase had been asking the SEC for guidance for a very long time. Which of these tokens are securities specifically? And the SEC wouldn't give them a specific answer. Then Coinbase took the SEC to court, and they're actively in a court case right now to say, we demand that you tell us what your regulations are. And the SEC didn't want to act. So now, because the SEC is suing Coinbase, hopefully, at least the courts will say, well, if you're going to take them to court, you have to be clear about
yeah.
when and where you take them to court.
I think this whole SEC, I mean, look, I'm a big fan of good regulation, right? Like we need regulation. We get regulated about, how restaurants can keep their restaurants clean and car safety and a bunch of other things, right? And so like, I get it that you want to regulate this stuff, but what the SEC is doing is ridiculous. They let Coinbase go public and no complaints that Coinbase is running the same business that they're running, and they went public and they let them go public with no complaints, right? The Coinbase has tried to work with the SEC over and over again, asked for regulations on what is considered a security, what is not, right? What tokens are securities? And like you said, the SEC has decided that they don't want to decide what are securities, but they want to enforce security law on everything, or on these 13 or 12 different tokens that Coinbase is running. And, I get the whole, like, with FTX, like they were doing a bunch of legal stuff, but Coinbase is audited by, I think, a company or two. They are public. They keep all, they don't use their customer, as far as we know, they don't use their customer deposits for lending. I mean, they have tried to do as much as they can so that they stay in the, they can stay in exchange and stay in the legal view of what they think is right. And it seems that the SEC is just, since the FTX scandal, they're out there to kill crypto companies, which is sad because, like, Singapore is releasing or has released some new regulation, right, around crypto. I think the European Union is doing the same. Like you don't want to be a place where America doesn't want to be a place where innovation comes to die. Like America has been historically strong, at least since World War II, because of the innovation that has happened in America and the large single market access that all American companies have within the US, right? So it's pretty. I think the whole situation is pretty bad. On top of it, like the CFTC and the SEC can agree on who gets jurisdiction and what a commodity and a security is, right? Like I think there are a whole bunch of problems. And I would really like to see the Biden administration really kind of go into this and like fix this kind of thing. Of course, I doubt that something like this is something on that's high priority for them. But hopefully, you never really want things like this to go to the courts, right? You want legislation to happen. You want Congress to figure it out. I think it's gotten so bad. There are a bunch of senators who have tweeted that couple senators have tweeted like, oh, the SEC is weaponizing their own technology industry, allowing a company to list publicly and then stonewalling their attempts to register as indefensible. And Senator Bill Big, I guess. I think there's a senator from Wyoming who also did something. The SEC suing Coinbase. I'm sure there are probably other politicians. These are the only two that I saw recently. But yeah, I think
it's hard to know what the other force is. Like, who would want to stifle crypto innovation in the US? Which people would stand to lose the most money if crypto was successful in the US? Like, is it going to take away from someone else's business and they don't want it to happen? I was just reading the forum post for a significantly successful DAO named DAO. And they were talking about some changes to their governance process and how they're going to incorporate a services business to complement the DAO. And the comment from the person posting was interesting in relation to this. It said, one of our primary agents for the DAO already in Canada, but it isn't in the US, which is the mantra for any project remotely related to crypto these days. So it seems like people that are active in this space, they don't even think about being anywhere close to the US. It's like a third rail to do business in the US.
Yeah,
these organizations.
It's really sad. Like, I mean, the US is the largest single market in the world. Like, the government should be focused on increasing innovation and, having like crypto companies have access to this market because, I mean, all the advancements that can be made using technology, but also just like from the government perspective, like innovation is good, job creation is good, increase in tax collection is good. Like, like those are all things that the government wants. So,
yes.
One other interesting that I saw was like, what's his name? Oh my God, I'm blanking. Matt Levine.
Yeah.
Right.
That sounds right.
Yeah. His newsletter is awesome. He also pointed out a good thing that like, it seems the SEC does, well, from his perspective, at least SEC wants to, potentially kill crypto. And I think, the SEC could ban crypto if they win the lawsuit. Right. And he lays out a bunch of different options. I don't know if you can find the article or the newsletter. And I think the last option he gives is like what's possible is like Congress steps in, changes the rules and then pass a bill to say like what is regulated, what is not, what is the security, how can DAOs work, how can crypto companies work. And I think really that's like the best case scenario for crypto. And the second best scenario is like the SEC loses in court, but, and crypto continues to happen in the US without regulation. But I don't think long-term that, this is the newsletter. I don't think long-term that's great either, right? Like you don't want to be in a situation where like, because the SEC lost in court, there's no crypto regulation that comes out of it because like, legislatures are like, you know what? They lost in court. This is like a problem for another day. Right.
Yeah. Just pushing the burden down the road, you mean?
Yeah, exactly. People who are listening or watching, they can find Levine pretty easily on Google. What are your thoughts on this?
I think we're still in the early days of bigger battles ahead. Like as a crypto optimist, I mean, in some ways, the reality is if you have a private wallet, you don't have to worry about like what your local jurisdiction says. That's the whole purpose of it. If you're in a country like But people would typically point to like a third world country or a dictatorship and say, oh, in those places, crypto is great because you can hold on to your assets. But even in this case, it's great too, because if the SEC decides they don't want you to have a cryptocurrency, you can still maintain it. I think, Bitcoin and crypto 10 years ago, when they're small, like open source projects that are niche, nobody cares. When they're $100 million, market cap, maybe people care a little bit more. In the last bull market, crypto, everything, Bitcoin, Ethereum, and all that was closer to $2 trillion. Mm-hmm. I think the market cap of gold is like 10 trillion and the market cap of the US dollar is like 30 trillion. Mm-hmm. So if that trend continues over time and it becomes more of a player in monetary value and just power in general, I think you'll see more friction in those ways. I would love to think that there's a healthy, optimistic outcome, but there's just so much, it's taking power away from someone at the end of the day. Mm-hmm. And those people like to push back. They want to, they want to let go of their revenue.
Exactly. Companies, right. Politicians. But what's interesting is that I don't necessarily agree that sure, from like a user experience perspective, even if in your jurisdiction, they don't allow crypto with private wallets, you can hold on to your assets. But a lot of it is also driven from institutional investment, right? Like companies who want to build in the space, assets that pension holders or private equity funds or, whatever, hedge fund managers trading crypto, all of these things at the end of the day increase the demand, which increase the price of a token, right? And people aren't interested in crypto. The mainstream US population and media are not interested in crypto if it doesn't hold some asset value, right? And I think the reason why these crypto got so big in the last two bull runs is because you heard about Bitcoin billionaires and people making retiring after investing $10,000 in crypto and all of a sudden they were millionaires, right? I would like the media to get away from that because I really focused on, the Web3 aspects of crypto and blockchain and permissionless and decentralized. But the reality is that a lot of those things do drive the crypto price and how many entrepreneurs are in it. So I do think it's important for the government to do some regulations because institutional investors really drive a lot of the capital that comes in.
Completely agree. And if those investors are not based in Palo Alto, there might be investors based in Dubai or investors based in Singapore that want to participate. And that would be the worst case.
Yeah.
But it's a global market. So, well, episode 2 in the can. Much fun as always, Eshan. And looking forward to continue the chat next week.
Yeah, excited. This has been fun.
All right, man. Good talking to you. Take care. Cheers.
Yeah.